Good morning, everybody. It's Tuesday, October 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 2 at 422 3/4. January soybeans were down 10.5 at 1064 3/4. And December Chicago wheat was up a half at 584.5. This morning, the USDA announced an export sales announcement of 195,000 metric tons of corn to unknown destinations for 24. Also announced was 120,000 metric tons of soybeans, also to unknown destinations for 24. Yesterday afternoon, we had crop progress and conditions out. Corn dropped 1 point in the good to excellent category at 64%. Came back 21% harvested. That was versus 14% last week, and right on pace with last year at this time. Beans were unchanged in the good to excellent category at 64%. They were also 26% harvested. That's versus 13% last week and above last year's 20% total. So we're making some good progress there in the bean complex. And winter wheat came back 39% planted. That's versus 25% last week and 36% from a year ago. Good morning, guys. A lot to get to here. I guess big portion of the news overnight. The strike, the dockworker strike, began overnight at midnight. They failed to reach a deal. So we've gotten some questions here coming in this morning on just our initial thoughts and what that could potentially mean for our markets, and then we'll I guess revisit a little bit after yesterday's report and some of the price movement, what we're seeing as we go forward. So maybe Justin, kick us off with a few thoughts here this morning, and then we'll throw it around the room.
Yeah, thanks, Dan. I think it was anticipated that they would go on strike. It's not supposed to really affect grain shipments except for, some containers, soybeans, some things that we send out via container. But, all the main exports that, go through the river system, in bulk and ocean freighters, shouldn't be affected at all. So I think, and you can see that in the markets, if it was a big, effect to exports or anything, you would have seen spreads really widen, really back up, and the opposites happen. So I don't really see that being an issue. I think Ryland can talk a little bit about, poultry and some of the meats are a little bit different story. But as far as grains in general, doesn't seem to be a major issue. I saw also the, BNSF is, opening back up all the rail service to Mexico. So I don't see it as a big factor for grains.
Good. I guess having had a little bit of time to chew on yesterday's report and just, kind of the ramifications of what that looks like for the balance sheets as we go forward, what are your thoughts there?
Yeah, I mean, like we talked about yesterday after the report, it certainly helped the cause. We got to some big technical areas, especially in corn. We're close to the 100-day, kind of back up to the highest in, several months now for nearby prices. So I think we're probably running into some good farmer selling. Yields still coming in good. We're just really ramping up corn harvest now. I think there's a lot of beans, especially, center of the belt, dried down really fast. So all the attention, seems to be on bean harvest, and several areas, that we've heard are already starting to wrap up. And I think, switching over to corn. So early yields have been really good or better than expected in a lot of areas, but it's still early. So we have to see how that trend unfolds. As far as balance sheets, I think it was friendly for sure for corn, but still have plenty carry out. So to me, it's going to be what that final yield ends up being. Next report, I think the market's maybe trading the yield could come down a bit. The shock would be if it goes up, obviously. So we have to see how that all plays out. The 80 million bushels is a nice to draw down on the stocks number. At the end of the day, the 3 or 4 million or 3 or 4 bushel an acre difference could be what drives the market, higher or lower from here. Now we're kind of in this balanced area. Obviously, the funds have covered a massive amount of shorts in most of the commodities. So we're pretty clean balance here. And I think we see what South America does with, if it starts to rain. I know in 14 days they're calling for it, but that's kind of been that kind of chasing that 2-week forecast. So if it really starts to rain and there is a pattern flip down there, I think that'd be probably pretty bearish. right now. So we have to kind of see how that all plays out.
Very good. Ben, what's on your mind today?
Yeah, just on the port strike, I think that the longer it stays on, the potential you get for just a bleed out of different industries that would definitely lean us towards maybe a recession. I think you would have to see it play out for more than obviously 10 days, 2 weeks, but a lot of industries that are dependent upon things that are being shipped in. And then, domestically, the things that we want to ship out become a problem as well. But dependent industries, the automobiles, construction, things like that. So I think you got to keep an eye on it. But to Justin's point, 2 weeks time, we're going to be at 50% probably in beans, maybe a little bit more, and looking at a shift, projected shift in the weather in South America. So grain markets are at a pretty critical point here. It was great to see them lower the carry in for corn. Shows that we've priced to do business. Corn's a market that if we do start to see a reduction and further reduction on the next report, and we continue to see business, it could get interesting kind of quick. But I think that the bigger risk is that we see higher yields or unchanged yields in the October WASDE.
Yeah, Dustin, any thoughts to add there?
I think that a couple of tailwinds I wanted to have mentioned here is just the Brazilian real has been creeping up back into the 1830 range. And we also have been looking at really good crush margins and improving crush margins. So we were $1.70 yesterday, highest yet of this year for December. So I think there are some tailwinds, for beans. It kind of makes sense too. If we are looking at excess supply, like yesterday, beans kind of took a little bit of a backseat to corn. And, you just think logically of like why you might see really high crush margins is lack of crush capacity, but plenty of soybeans around. So that could improve a little bit as well. But it does give us just some undertone of support where you're going to make sure that facilities are trying to get to 100% capacity with that type of a margin.
Oh, very good. And we're actually entering today is the first day of the harvest price discovery period as well. So we'll be going through October, setting that price. So, something to be cognizant of is whether you're in a crop insurance situation or you've come out of it, at least something to analyze as we go through the month. That's something we'll be looking at, right, Dustin?
Yeah, I think the last year is just a prime example of why this is so important, is that we had, kind of a good acknowledgement of what the crop size was in October last year. And if you look at where prices were in October versus where they were for most of the rest of the pricing window when growers actually sold the grain, there's a big difference. So relying on that guaranteed income, is a risk. And last year kind of proves that. Is you might have a revenue guarantee that expires in October. Actual revenue received is much lower if you don't sell it to February or March. So, if you're relying on that floor, let's say you're in a spot that's had yield loss, this rally actually hurts you in a way because price loss was part of that revenue drop. And in this last, 40 cents of rebound we've had for corn coming into today is actually something that is perceived by crop insurance as more revenue. So it's less payment. So in turn, we've got, 23 business days this month. If you've been relying on insurance as your floor, slowly building that floor up, back up, maybe through put options and maybe through cash sales, something to consider. That last year, that was actually the right thing to do. It doesn't mean it's going to be again this year, but it's a reminder of kind of the troubles that came out of last year when people relied on crop insurance guarantees and then didn't sell it after that expired.
Very good. Anybody else, anything to add here before we transition over to livestock? Everybody good? Rylan, pretty quiet yesterday on the cattle front, but interesting. I know Justin kind of alluded to it. This port strike with the poultry and hog industries could be kind of interesting. So maybe share a few thoughts there.
Yeah, I mean, I think overall, we just didn't see that much caution from the market yesterday. So I think they're kind of downplaying it a little bit, just because out of those ports specifically, you'll see a lot of variety meats getting shipped out. I mean, it's not a small amount in terms of total dollars, about 100 million a week, but a lot of the it seems like the Caribbean and Central and South America, there's a lot that comes in and goes out through those terminals. So it could definitely be disruptive. I mean, I think, like I said, it feels like the market was just kind of waiting to see if this strike was actually going to happen, but this could take some buyers out of the market temporarily, depending how long this lasts. So I think overall it could bleed into us. I think it's just really a matter of time and how long, but we've already started hearing that ships are getting rerouted to other ports that can do that. I mean, I'm sure everybody's probably considering it now if they hadn't already. So, the last time this happened, I think people are looking back towards the pandemic when the ports shut down and, toilet paper exploded in price and everybody was looking for that. And then, you kind of had a mad dash for beef products. So it's hard to say exactly like how this is going to hit and how it really, I think, just depends on the duration, how long this is going to last. But I think just in general, most of our meat is going to be for domestic usage that we produce here, especially on the beef side. So I don't see it having a very significant impact on the beef market, but pork, I think it definitely could. So watching the cutout this week pretty closely, watching the kill, watching cash, all those things, just to see how it's really going to affect that.
Very good. I appreciate that. Those comments. We'll continue to monitor that situation. We appreciate everybody that tunes in on a daily basis. We'd appreciate it if you'd throw us a like or subscribe. It certainly helps us with all the YouTube algorithms and all that kind of world. So thanks again to everybody that supports the show. We enjoy putting it on for you every day. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here today, guys. It was a good conversation. Hope everybody has a safe harvest here, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.